is clearly not getting better. I think the relief in Alibaba today is that it's not getting worse either, that the overall growth stopped decelerating. They didn't decline this quarter. They still had eked out minimal growth. Their profitability didn't decline again. It even ticked up a little bit. In terms of Singles Day, they had been pumping that for a very long time. They extended Singles Day to weeks before Singles Day. They made it international. They made it into a big festival. It got a little too big for it to continue to grow. And so they've decided to de-emphasize that and to just retrench back to just having a day of sales. So clearly the volumes were not higher. I think they tried to imply that they were about flat, but clearly they were not higher. And that's indicative of the overall consumer spending in China. Clearly it's not growing, but maybe it's not slowing down quite as much as it has been the last few quarters.
Yeah, they didn't have the gala show either. And of course, one of the key acts that they did have previously, that of Taylor Swift. And she's, of course, dealing with her own issues in ticket sales right now. But talk to us a little bit about the earnings. Was there anything out in there that jumped out at you? The revenue was up 3% only, and we had a net loss for the company's books.
Yeah, I'd say that what jumped out is that it didn't get worse. Apart from cloud, which decelerated all the way down to 4% growth, the commerce business didn't slow down further, and the other businesses appeared to have stabilized. The other thing that stood out was they're doing more to manage expenses down, which is a big relief to investors. And what you pointed out earlier, which is they expanded their share buyback. For them to be responsible on expenses, responsible in terms of uses of cash flow, those are the things that investors are looking for. As long as the consumer is not growing, investors want to know that their capital is being protected and preserved. And Alibaba did a couple of things along those lines. Those are the things that stood out.
Okay, and another indication from the company, we heard from them as they're trying to protect their investors and maybe get some new ones, is this primary listing in Hong Kong. It was supposed to be done or completed before the end of this year. Is there anything along with that may surprise you or that you're worried about?
It's very important that they get this done. It is very possible that they will not be able to continue to list in the United States. And therefore, they need a primary listing to be established for them to be able to have their shares traded in the secondary market. So the faster they get it done, the faster they remove that risk, because I do think longer term we're going into a world where it's going to be much harder for Chinese companies, even as big as Alibaba, to be listed in the United States.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.